and today I'm presenting my analysis titled Executive Compensation in 2024, Insights from America's Highest Paid CEOs. This project examines how much America's top CEOs earned last year and what drives those numbers. It also reveals what the data tells us about executive pay practices. So first, here's a quick overview of the data. I compiled compensation details for the top 50 highest earning CEOs on the S&P 500 for the 2024 fiscal year. The data information comes directly from the AFL-CIO Paywatch website. I broke down the numbers into base salary, bonuses, the value of stock awards, which are comprised of restricted stock awards or restricted stock units, where you get company shares after meeting vesting conditions. Stock awards can also be an employee stock purchase plan, which allows you to buy shares at a discount, which are then yours to keep or sell after a holding period. Stock awards are designed conspicuously to align pay with stock performance. There was also non-equity incentive pay, which is a form of performance-based pay in the form of cash given to reward achieving specific set goals over a set time period. There was also change in pension value and deferred compensation, which both delay taxes until payout and behave as retirement savings that build wealth with less immediate tax impact, but with the caveat that deferred compensation carries risks like employer bankruptcy. And I also added everything into total pay and compiled all of the different forms of compensation that the CEOs are getting, which was kind of interesting. I noted the CEO's gender. There were only 4 women in the top 50 highest earning S&P 500 CEOs. This data gives us a clear, standardized snapshot of the most recent full year executive compensation across the upper earning corporations in corporate America. Here's the big picture on total CEO compensation distribution in 2024. The average total pay was about $46.5 million, but notice that the median is lower at $37.3 million. That tells us that the distribution is heavily right skewed, with a few enormous compensation packages pulling the average up. The standard deviation is over $24.3 million, showing huge variability when compared with the median total income. Total pay ranged from roughly $30 million on the low end to a staggering $164.5 million at the top. Looking at this histogram, you can see that most of the CEOs cluster between 30 and 43 million, but there is a long right skewed tail driven by 17 out of the 50 CEOs, with one of the 50 in the data set being an extreme outlier. This skewedness is a pattern that we will see consistently in this data set. So how are these packages actually structured? Base salary averages only 1.4 million. The mean of the bonuses adds another 1.5 million, but the real driver here is equity. Stock awards and option awards together make up the substantial remainder of the total mean compensation. This table summarizes the average values and approximate share of total CEO pay, with equity comprising roughly 70 to 80% of total pay for most CEOs. The heavy reliance on equity is likely intentional, as stock awards are designed to align CEO interests with long-term shareholder returns. But this also creates the extreme variability in the outliers that we just saw on the prior slide. Let's look at base salary here on this slide. The histogram bars show base salary compensation for each CEO in the sample. Notice that the distribution is mostly normal, with some outliers at the right end. Base salary is remarkably normal and consistent when contrasted against total CEO compensation, with most of them earning between $900,000 and $1.5 million. When we look at total salary compared to base pay, the differences illustrate just how small W-2 wage income is relative to the overall compensation package totals. The base pay, sometimes being as low as $0, has strong tax implications, as stock and equities-based awards can be borrowed against without incurring a tax penalty on the amount that the owner of the securities has borrowed. Furthermore, When securities are sold and a return is realized, the non-wage income is taxed as a capital gain at a lower rate than wage income, lessening the overall tax burden on the seller of the stock when contrasted against the tax rate of wage income that the majority of most Americans earn. I also examined whether gender plays a role in compensation. In the sample, there are 4 female CEOs and 46 male CEOs. The mean total pay for female CEOs was around 12 million lower at 35.2 million compared to 47.5 million for males. The median total pay was also higher for men at 37.4 million versus 33.8 million for women. Median base salaries were nearly identical at 1.1 million for women and 1.4 million for men. The sample of female CEOs is extremely small, and there's actually no evidence of an extreme pay gap between genders in terms of base pay at this level. There is a slight pay gap in the median total pay and a larger gap in the mean total pay, which is interesting and likely driven by the extreme outlier at the top. Female CEOs could be paid less in non-wage income, but broader conclusions would require a larger and more diverse data set. There were only 4 in the sample, which kind of indicates that women are not equitably hired as CEOs, which is an interesting thing that could possibly be studied. Let's look a little more in depth at the extremes of pay on this slide, as well as at the highest paid CEOs here. Overall, total salaries remain mostly clustered with one extreme outlier, as shown in this QQ plot on the side. On the lower end of the sample, total pay exceeded 30 million, which puts into perspective how comparatively high even the lowest packages are to average worker wages in the United States. The lowest base salary was Michael Sievert's $0. $25.2 million of his $30.8 million salary was paid in stock awards, with $5.5 million coming from bonus pay. The remainder was deferred compensation and other compensation. The highest paid CEO in 2024 was Patrick Smith of Axon, which is mostly known as a body cam and taser manufacturing company, with $164.5 million in total salary. His pay is largely a stock-based package, as his base salary is only $31,000. Second highest was Brian Niccol, the new CEO of Starbucks, with $95.8 million in total salary after a $61.5 thousand base salary. He had the highest CEO to worker pay ratio out of all of the companies on the S&P 500 index, earning 6,666 times more than Starbucks' median earning employee received. Lawrence Culp and Steven Schwartzman rounded out the top 4 at 89 and 79 million, respectively. Both had comparatively low base salaries, with Culp being paid $2.2 million in base pay and Schwartzman being paid $350,000 in base pay. So what did I take away from all of this? First, the results largely matched my expectations. Securities comprised of stock and equities overwhelmingly dominate CEO pay, with base salary being comparatively low and normally distributed across the board. What surprised me was the absence of a clear gender pay gap at this elite level and just how extreme the right skewedness is. One outlier was more than double the second highest package. The biggest insight is that modern CEO compensation is almost entirely based on stock performance. CEOs receive exorbitant payouts from securities that rely on their companies doing extremely well in the stock market. This structure strongly incentivizes long-term value creation for shareholders, but it also amplifies public debate about whether average CEO pay north of $29 million is justified. This also highlights the extreme CEO to median worker pay ratios that we are seeing compared to decades ago. To wrap up my presentation, the key takeaways here are 2024 average CEO pay was around $46.5 million, driven overwhelmingly by stock and equity-based awards. Base salary overall represented only a small fraction of total compensation. Pay packages are highly variable and heavily right skewed by one extreme outlier. Overall, the compensation model prioritizes alignment with shareholder interests and not with worker interests, for better or worse. I learned quite a bit by taking this class, and I will carry this learning with me throughout my life. Thank you for your time, and I hope that you learned something from my presentation.